Hi there, welcome to Grain TV. I'm Kevin McNew. It's Monday, January 23rd, and we started the week on a mixed note. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, corn finishing fractionally lower off of 370 on the day, closing at 369 3/4. Beans, however, was the leader to the downside, losing 7.5, closing around 1060 on front month March, and wheat in Chicago gaining a little bit back from last part of the week's losses, closing 5 higher at 433. News today was pretty limited. There was a continued discussion about Argentina's dry weather situation after very, very wet conditions starting around Christmas and going all the way into the mid part of January. But now the weather forecasts are hot and dry, which is giving traders some thought that the crop has the potential to rebound here. Other news out today, the U.S. dollar continued to drift lower. Not a big trade day in the dollar, but it was certainly moving lower, and it's reaching its lowest point since December, which is certainly supportive for grains and especially wheat, which is very export sensitive. Last week in news, Farm Futures came out with their survey of crop acres for 2017. They showed both corn and soybeans at 90.5 million acres planted for U.S. farmers this coming spring. 90.5 for soybeans would be a 7 million acre increase over last year. We've been trading, or at least early discussions a month or so ago were 3 to 5 million higher in beans. We've seen 4 to 6, and now we're seeing 7. So the numbers just keep creeping up as we get closer and closer to planting. The soybean price continues to hold up relatively high to corn, trading around a 2.62 soy to corn ratio versus normally around 2.4, 2.3, somewhere in that range at this time of year. So overall, we're still expecting very, very big acres in soybeans this coming spring. Let's take a look at the Monday export inspections came out from USDA. Nothing to light the charts up here. This was certainly a little on the light side for beans and wheat, coming just below the low end of analyst expectations. Corn coming in sort of at the high end at 963 versus 800 to 1 million expected. But really what everyone's sort of wondering is what's going on in China, and will China continue to be a buyer of U.S. soybeans? They certainly have tapered off their buying program. They were white hot, certainly after a U.S. harvest all the way up to the end of the year. But since the end of the year, they've really started to slow down their purchasing patterns. And in particular, we've got the Chinese New Year starting at the end of this week and lasting for a week. So it's unlikely we'll see any significant business from China as we get towards the end of this month. If we look at what's driving the bus for China, it really is the hog margins that are going on down there. And China is a voracious appetite for pork, and that is what really sort of drives the soybean demand, not only in the U.S. but in South America. And when we look at hog margins in China, what we can see is some fairly significant moves in the last 3 years. That country has gone through a significant change in small-scale farming, now sort of adapting more commercial-sized farming operations, both for efficiency reasons but also for environmental reasons. They are moving away from small farming operations to large farming operations. We've seen, in particular last year, starting in January, and rallying all the way up to June, that hog margin, that spread between what they could sell their hogs for and what the feed was costing, rallied sharply, going from 300 yuan over to 1,000 yuan in a 6-month period. That really was the stimulus last year for the big rally in the soybean market. In fact, if you look at the peak in the China hog margin, it peaked on the exact same day that the soybean market in the U.S. peaked at 1208 on July futures. So not coincidentally, I think, what we see in the U.S. is directly related to what's going on in China's hog market sector. And so if we look ahead at what we've seen this year, we saw the low in the hog margin in October. Not unsurprisingly, we saw a big turn higher in soybean purchases and of course our soybean price. But somewhat concerning is we saw this hog margin peak out last week around 800 yuan, and has now turned lower to 700 yuan. And will this be a start of a cycle to the downside that may last another 3 to 6 months and would put us into spring or summer of this coming year? And if so, then that certainly paints a potential weakness in the export situation for beans. Obviously, we're going to be facing more South America competition in the coming months, and if China's hog economy is starting to turn south, then that poses problems as well on top of that. So I think it's really a good time to be looking at pricing, especially new crop beans, with sort of the double threat of the potential weakness in China, the South American crop production, and big acreages expected in the U.S. this coming spring. So I think it's really a good time for farmers to be looking at the potential for new crop beans, with new crops still trading well above $10 in that $10.25 range. Looking at March beans action here, let's take a look at the 4-hour bar chart. And what you can see is after trading to a high of 1080 last week, we've really sort of drifted down, and there's been no sort of major sell-off, but we consistently have been trading lower, testing new lows, getting down to that 1055 mark today, although we did close off of that, closing around 1060. But I wouldn't be surprised with this chart action here, sort of showing a head and shoulders type formation, to see us test 1040, which you can see was overhead resistance at one point on this chart. So look for 1040 as a potential area where we may be heading in the near term as this chart starts to break down. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain marketing situation, visit us online at grainhedge.com. Sign up for our demo and our morning comments and our technical alerts. We'll talk to you tomorrow on Tuesday.